today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the July 20th, a magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here, but really much more important than that, during this next 16 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, we've got you covered there, too. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on a magical, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, I've got a mixed bag out here. To the downside are the Dow off 36, the Russell down 9, the New York Stock Exchange 17. The trannies are the big loser, up down 173 points. To the upside, the S&P 13, the NASDAQ 202. Semis are up 18. Wilshire 5000 is up 168 points. We probably should stop in and take a look at that for signals. And the NASDAQ Composite up 173. You got gold up $7, silver 44 pennies. Light sweet crude is up 16 cents. Natural gas can't catch a breakout here. And the 30-year Treasury, that's trading to the downside. And the 30-year Treasury up 9 ticks, trading out at 180, even. Steven. Lead the charge dollar-wise, the upside. The amazing one, Amazon up $171, nearly 6%, 31.33. Tesla's up 87. Shopify 71. Mercado Libre 48. Google up 39. Spotify 25. That's about a 10% move to the upside. To the downside, Booking Holdings $15. Moderna is off 12. Nikola Corporation off 10, Humana down 8, Essex Properties down 7. So there's certainly things to look at. Of course, I want to look at what you want to look at. There are just a couple of questions that have come in. Why don't we just take a quick peek around the general markets? We'll go to the questions. We can come back to the general markets. Okay, sounds like a deal to me. Well, the deal, and the reason why I want to do that was because on Friday I'd mentioned there may be some new profiles forming, and we wouldn't know till Sunday night. Well, Sunday night has come and gone, and now we know. There is no new profile inside the ES Mini out here. There's the old profile inside the NQ. If you're wondering where resistance is inside the NQ, well, price has nearly made its way up there. That's at 10,862. That is the top of the daily box. Now, you're going to want to watch 10,862 because any close above that, and I'm not saying price is going to close above that. I'm just saying any close above that, well, it doesn't negate its topping signal, but boy, that would be a strong bullish message because that is a bearish structured profile. I mean, the center at 10,665 is closer to the top than it is to the bottom. There was a new profile that formed in the Dow. The YM out there, the top is at 27,886, the bottom 26,178. And so we should get a signal here between the Dow and the NQ with regard to what its intent are. Now, the NQ, which has been strong today, it is nearing that resistance level, so we want to watch what's going on. Now, I mentioned that 10,862 is the resistance level, and on the 30-minute chart out here, what you will see is that it has formed bar number 9 of a TD9 count. Now, we do know that if this pattern is to identify a high, even if it's short-term or whatever the term might be out here, that high can occur on bars 9 or the bar following 9. So we've got about 20 minutes left in this session out here. If there is a close above the high, and so far this would be the high of the, well, I'll give you the number out here. Well, we won't know till 1:30, but right now the number, let's assume it was on the bar that closed at 1 o'clock, that high is at 10,834.50. If there were a close above that 10,834.50 level, then we know that the TD9 count pattern is not identified the top out here. So you've got resistance on the daily and a 30-minute time frame chart that is showing you a signal. You know, it's not just the 30-minute time frame chart. I won't mess up that chart with all its tools, but I do have another NQ chart that I can slide over, and you will see this is the hourly time frame chart. So is it the hourly? Is it the half-hour TD9 count pattern? I don't know. Here, on the hourly, but what you know about the 30-minute time frame chart is if we get a close above the high level that I gave to you, then that wasn't the top. But you've got an hourly TD9 count pattern, and that says that the high could form, well, by 3 o'clock, because the bar number 9 was the bar that ended at 1. This would be the bar following 9. This, well, barely by 2 o'clock. Not true, Steve. Oh, boy. Well, I tell you, Tammy, it is true in some places. It absolutely is. I'm speaking about Florida and information. But anyway, so let me just stay with the TD9 count pattern out here. And so you've got it on the 30-minute, and you've got it on the 60-minute as prices coming into that resistance level on the daily time frame. So that's what I would be paying attention to. And don't forget, the NQ does have a valid topping. It's got a couple valid topping signals out here. Those being on the daily time frame, the TD9 count takes place on the bar following bar 9 and a Rhodes momentum indicator top. So the all-time high is its resistance level simply from a Japanese bearish reversal candle pattern that I'm referring to. Okay, so there's nothing else. Now, we'll pay attention to the Dow as well, the YM, either at the high at 26,886 or at the low at 26,178. So that's what we've got out there inside the equity future market out here. If we take a look at the spot volatility, or take a look at the New York Stock Exchange again, just a general view of what we're looking at. So here, the advanced decline oscillator, that's the difference between the advancing and declining issues, and take a look at their 39 and 19 period exponential moving average and coming up with the difference between those two, which right now is -6 and change out here. That means it's below the zero threshold level. Now, being below the zero threshold level, but closer below that today, may not be signaling that sellers are in control. You need 2 days below or 2 days above. Well, we've been above for more than 2 days out here. But here's the deal with the New York Stock Exchange. If you take a look at its advanced decline oscillator combined with the 50-day exponential moving average of the spot volatility index, that's the bottom panel out there, things don't get rocking and rolling to the downside until those two are in agreement with each other. To the downside, says spot volatility index needs to be above the 50-day exponential moving average. Here we've got the potential conflicting signals out there, and that just basically has a sideways, choppy style market out there. So that's what we're looking at, folks, when we take a look at the general marketplace out here. Not really much more to add to that. So when we get back from this break, let's go take a look at a couple of the requests that are in. One of those requests was to take a look at Apple, AAPL. So we'll do that when we get back. Right now, as we just take a look at it, we know that Apple has made the 1.618 expansion of its move from the high back in January of 2020 to the low in March of 2020. And that could be a place where we start to see Apple top. But we'll have to go take a look at the daily time frame charts to figure that one out. And that's what we'll do when we return. You're right.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Hopefully you can hear me clearly out there. We're taking a look at the charts here for Apple. The daily is on the left, the weekly is in the center, and the monthly is on the right-hand side of the charts. Okay, great. So price is above. Now, this is for Tim. Tim is considering taking a long position before Apple reports earnings next week out here. So, Tim, I can tell you that right now, if we just look at support and resistance, price is above all profile level of resistance. Well, I don't have the quarterly up, but it's above the daily, the weekly, and the monthly time frame. So what you and I need to go look at is see if there's any kind of topping signals out here. Now, we're going to look at the daily time frame chart first, and what we see out here is prices moving higher, doing less relative energy. It's been doing that for a while, but no bearish reversal candle here yet to confirm this top. So no top signal just yet, but if you were to see a bearish reversal candle, then you could take a look at Apple pulling back to support. Now, support out here is 360, 364, just so you know. So if you're taking a look at trying to take a long position, you want to factor in a stop below support. And support is either 360, 364, that's the TD9 count breakout support, and then just below that is the bottom of its bullish structure daily profile, 362.53 out there. So when you're doing your reward risk out here, and you want to understand where is support for that trade, you now know that it's at the 362 level. So, but the potential for a topping signal, but nothing that has been confirmed just yet. No TD9 count top out there, but there is wave number 7. There is letter G out here, and that did occur at the the July 13th high. So there is a topping signal But now, much like the market out here, Tim, so you got a topping signal, and that's going to be the high of July 13th. But price hasn't really broken through any key levels of support. Trading below Stevie's green line, granted, so that's level 1, but it's above all the daily profiles. So no real key levels of support have been broken. So I'm not trying to talk you out of it, just letting you know there's a valid topping signal. We go take a look at the weekly time frame chart. The weekly time frame chart, we don't have anything to suggest that Apple has topped out here. Let's go take a look at the monthly time frame chart. And on the monthly time frame chart, price continues to move higher. It does it with less relative energy out here. But on a monthly basis, we need to see some type of topping signal. Topping candle, we don't have that. And on the quarterly, I don't have anything. So really, Tim, it's all about you, and the daily time frame chart is best that I can tell. So if you want to take the trade, you know where support is at. And all I can say is best of luck to you. Now, if you're going to take that trade, then if you're going to take that trade, let's come back here. What is it that must happen inside the indice in order for you to take that trade? What must happen? Now, we covered that during the first segment of the show. You're exactly right. Price must close above resistance inside the indice. So you don't have to take this trade. In fact, I'm telling you not to take this trade right now, because you could get the stock right. Maybe Apple does move up, but it'd be pretty muted here if, in fact, sellers are just sitting inside the NQ at the top of that profile out there at 10,862. So I would say for you to take that trade, because you've got Apple in many of the indices, but certainly in the NQ and certainly inside the Dow, you'd like to see a close above 10,862 inside the NQ, and you'd really like to see a close above 26,886 inside of the Dow. At least get the NQ right, because that is a bearish structured profile. So Tim, you're not going to take that trade. Well, you might take it. I'm just I'm suggesting you wouldn't take that trade knowing that the indice is right up at what could be some pretty strong resistance out there, and we'll know soon enough. So I hope that helps you out with regard to Apple out there, and thanks for writing in. Steve W. writes in, and he wants to take a look at ticker symbol. We did this before, IBIO, but he's asking a very specific question, which is where would you put your trailing stop out here? Now, I believe that Steve is long on this, and it's trading out at 664. We can understand why he would be asking that question, because you've seen this thing it's been a little rocket ship. Again, IBIO is the ticker symbol, and has really moved high. Now, my question is always, first, when somebody gets into a trade, what was the target? Where was the target? Now, Steve didn't provide me with that. So first, I'm going to answer his question. And on a trailing stop, one way that you can do it, the very first thing and most important thing for you to understand is what's the average true range. Now, you can use whatever time period you'd like. I like to use 2 weeks worth of data. So what's showing up on the bottom left-hand panel of my screen out here at 74 cents is that 10-day average true range. So that's just average daily movement. Now, we know over the past 5 days that average true range has been much wider than that. I still like to use the average. I like to go ahead and multiply it times either 1.272 or 1.618 and place that stop underneath the day's close out there. So that would be one way to do it. What would be another way to do it? There's all kinds of ways. It would be to try to find where is support. Well, in the case of support, you're down at $1.92. It's at 662. I'm crazy. I'm not that kind of crazy to tell you to put your stop down there, so that doesn't make any sense. So profile-wise, support-wise, we can't really use that, Steve-O. So we have to eliminate that from our mix out here. If we take a look at Stevie's green line, that's priced at 343 on the daily time frame. You're not going to give it that kind of room. I'm not going to recommend that you do that. So now we're still back to our average true range. On a weekly basis, we're just looking for any kind of support levels out here, any signals. We don't have anything that changes that. If we look at the monthly time frame, we don't have anything to. So, Steve-O, I don't know what your target was, your price target. I'm looking at a monthly time frame chart. Your target might have been 547. That was a TD9 count breakdown level. But to answer your question with regard to a stop, I would just simply use an ATR out there and go from there. go from that standpoint. So I hope that helps you out. Thanks so much for writing in, and nice trade, and best of luck to you on the remainder of that trade. JM writes in and says, do you draw support or resistance lines on a failed TD9 count like in this chart? There was so that's a slight problem here. I'm going to have to look at this after the show because I don't have the time to focus on that and to keep the show flowing out there. So I will respond back to you, even though I don't have any other questions that are in the queue right now. Let me see if I can figure out what this is a chart of here real quickly. You just said the chart, and I don't see the I don't know what it's a chart of. That's part of the problem here. In fact, you didn't even tell me what this is. I can't even respond back to your question because I don't know what it is that you're looking at in order to be able to answer that question. So do me a favor, JM, is to write in, tell me what that symbol is that you're looking at, and also what's the time frame, although I could probably figure that one out. So that's all the questions that we've got, folks. We're going to go to a break. Of course, I'd love to hear from you at 877-927-6648. If I don't have any other questions, we'll find something to go take a look at. Dow's down 16, S&P's up 16, and the NDX 100 is up 208. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, BAM! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is off 16. S&P is up 16 points. So what do we want to look at? Why don't we just go take a look at a bunch of commodities out there? If you've got some questions, give me a call at 877-927-6648 or inside the den. You can always post a message, private or otherwise, and obviously emails steve@tfnn.com out here. So let's just take a look at all the charts that are included in the daily newsletter. You may find some of these helpful to you in your trading, in which case you might want to consider taking a test drive of the newsletter. Here's the gold charts out here. And so what we're looking at, so when we take a look at the commodity charts, a portion of the newsletter, what I want to understand, I want folks to understand is what's going on with the current contract. What is the active contract out there? How many trading days are left? That's on the right-hand side. What contracts are we taking a look at? Where are things trading out here? So if we take a look at gold, which we're looking at the August contract right now, you can see that price basically hit resistance out here. 1823.50 is resistance. The actual high today is 1823.40. Why did I say 1823.50 was resistance? That's the top of that daily profile out there. So it's right up against resistance. A close above that would be bullish. And that's really all that we can say about Goldilocks out here. Silver, we take a look at the silver contract. You can see that this is above a brand new profile that is attempting to form. It's bearish in structure. I won't have confirmation on this profile. We're looking at the September contract out here, but that would be very bullish. Now, that's its signal. So when we take a look at the commodity futures or anything out here, we're trying to understand where support and resistance. Now, the black background charts don't have my other tools out there. So even though price is above the top of the bearish structured profile in silver, that's very bullish out here, we still have to understand what is the makeup of any patterns that are out here. And we take a look, price is moving higher, doing less relative energy. And if you look at the low out here, that the most recent low was June 15th out here. Interesting there, John, huh? June 15th. And so as we take a look at that, you're now in wave number 7. That is letter G. So two potential pattern signals out here. And I would say both, quite frankly, are going to require a bearish reversal candle. The wave 7 doesn't really do that. It at least would require a close below Stevie's green line, which is at 1968. So silver's bullish. No reason to take action, but you do need to be cautious knowing that you have two topping patterns that are in play out here, wave number 7 and a potential Rhodes momentum indicator signal. We go take a look at the Dr. Copper out here. What is it doing? Trading out at 291. It's above the top of its daily profile. If we take a look at the December contract, it's run right in to the top of its profile or resistance. If we take a look at copper, here's what we know. Last week was a confirmed TD9 count pattern. And we take a look at that TD9 count pattern. It ran right, it formed that pattern right at resistance, the breakdown resistance level, 2.9635. So what you need to see is a close above last week's high. Now, granted, this week could be the high of that pattern. You are right about that. Higher high this week does not negate the TD9 count pattern out here. But let's go with what we have right now. Now, in the case of copper on its weekly basis, because it's ran right into resistance, that would have been a price target on a long trade out here, and you would start to tighten up that stop. But because the TD9 count pattern has formed and Stevie's green line or red-green line has changed colors, that's telling us that price and that line should catch up to each other. Now, that may just be a sideways move. It may be price pulling back. It's like any combination of factors out here, but you should know that copper's up against a pretty significant level of resistance, even though price is above its daily profile. Platinum, there's not really much here to report on for us, is there? It's just trading between support and resistance, whether it's trend line or whether it's TAS market profile. Take a look at light sweet crude. What do you know about light sweet crude? Whether it's August, well, September really, September, October, November, out here, major trend line resistance up against really the top of its daily profile. So that's what's going. So no breakout or anything along those lines. Now, if if I'll finally get the words out of my mouth. If price can get above these descending trend lines, above the top of those profiles, well, then there's something to talk about. Take a look at natural gas. What is it doing out here? Well, what it has done, ran into resistance at a descending trend line. So you can see that on the different contracts that are out here. Price today testing the bottom of its bullish structured daily profile. Now, really, you're going to want to focus on September, not on August. And on August contracts, that's going to be panel number 2. Price is trading just slightly below the bottom of that profile. So the number there to watch is 1.691 out there, close below that, which suggests that price wants to get back to test the prior lows out here from the late June time frame. Let's go take a look at lean hogs. What are lean hogs doing out here? Well, if we take a look at lean hogs, they've pulled back today to test support, the bottom of its bullish structured profile, and that's out at the 50.31 level. If price were to close below that, then you can see a small little rising trend line out there. That would become the target. But at this stage here, lean hogs have found support, or at least I should say the August lean hog contract has found support. If we go take a look at feeder cattle out here, what do we have with regard to feeder cattle? Feeder cattle are suggesting A to B equals CD to the upside. If we take a look at the August contract out here, that price projection is 157.10 or thereabouts. I can tell you on my other charts, I don't have any kind of topping signal. How about soy oil? Soy oil has broken out. It's above trend lines out there. If we take a look at, give me a second here to get my other charts up. Commodities here. Let's go take a look at soy oil, get a feel for where this is likely headed to. Where I got it right here. Now here is the August contract out here, and it's right up against resistance, 29.95. Now I can extend. I will extend it. Let me extend it that because we're all visual out here. It makes it a little bit easier. Give me just a moment to extend the line. Let's try that value. See if that gets over there. So I take that back. It is above a key level of resistance out here, and that's at the 29.95 level. So with regard to soy oil, that is just supporting that price simply wants to move higher. Now, you're going to ask me, move higher to where? The next breakdown resistance level is going to be 34.17. 34.17. John, we've got John from Philadelphia on the line. John, go ahead. How are you?
Hey, Steve, thanks for taking the call. Steve, I wanted to jump right in, give you a call, having listening to you right here on commodities.
Yes.
On Tiger TV. Would you pull up a hog contract, specifically the February 2021 contract? That would be LHG1 or HEG1, depending upon which data feed you're using.
Very, very right-hand panel. So that's the very right-hand panel chart. So you've got February of 21 up on my screen out here on the very right. Next to that, you've got December. So here in the go ahead.
Yes, I see that, and I might ask if you could pull up that Feb contract and blow that up so we can take a close look at that and see what you see on that.
Yeah, so here it's just trading in between support and resistance, and support being the bottom of its daily profile. That's at 59.17, and resistance being 62.05. And at that 62.05 level, you've got kind of a descending trend line as well. Hey, John, stick through the breakout here, if you will, and we'll come back and answer any other questions that you have. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're taking a look at the chart for lean hogs. This is the February 2021. We can see the higher lows and the lower highs out here. So we've got that little wedge pattern that is formed, and price is trading in between support and resistance. So, John, based on this chart, are there any other questions that you have or observations that you'd care to share with us?
Yes, Steve, thanks for sharing that. I like those higher lows. I wanted to share with you the fundamental bull case for February hogs, and nothing sooner, or put it this way, the December, October, and August hogs, I don't have the same bullish view. Here's the idea. Clearly with the lockdown because of COVID, we had that price plunge back into the April lows. That was a loss of demand, specifically at restaurants, as we know. That problem was compounded by the shutdown of a bunch of slaughter plants.
Yes.
And that reduced demand coming out of the feed yards by the slaughterhouses. We had a very sharp bounce into May, as we can see, and now we've gone lackluster, kind of drifting back lower. And if you look at the August, the October, and the December, they're back near lows.
Yes.
Problem we've got is market-ready animals continues quite heavy, so supplies are large, even though the slaughterhouses have come back up online, close to 100% actually. What's attracted to me here is looking at that February. Mind you, the time from birth till market ready is 6 to 8 months for a hog. Mm-hmm. And prices are so low and prices are so unprofitable. In other words, growers, ranchers are losing money on every head sent to the packer. That this low price, looking out to February, should have the effect of persuading ranchers and growers to reduce the number of animals that are going to actually grow and raise to market ready. And that should, or my speculation, that should result in much lower supplies come early next year. Hence, my looking at being long the February and the April 2021 hog futures contracts.
John, that's an excellent, a great overview and helpful from a fundamental standpoint. What's the current status inside those packing plants? Are they back up to full speed, or what's your take? Do you have any information on that?
Near 100%, not
near
quite.
100%.
But
okay.
The closure that we all read about in May has been largely relieved. The problem of quote-unquote COVID hotspots and closing those packing houses in May started to reverse, and now that we're in towards the end of July, the packing industry is very close to operating 100%. So
okay.
That problem seems to have been resolved.
So now I guess I don't really pay close enough attention to prices in the stores. I don't buy bacon enough, but my assumption was that prices were rising as the meat packing plant, or as the packers themselves had shut down and their problems. And was that the case, or did we just have such a supply?
Yes, when packing plants closed,
yeah,
the live hog futures plummeted. The idea being a packer isn't buying the live animals from the grower. So the grower, the rancher, the breeder has to accept lower price just because there's too many live hogs walking around that don't have a quote unquote a home to go to the packing house.
Yes.
At the same time, the retail price of pork skyrocketed. Why? Because the packers weren't processing live animals in pork cutouts.
Yes.
Now that packing houses are back close to full capacity, the supply
we should see prices,
of
I would think,
the pork
decline
to grocers has come way up. Prices are way down.
Yeah. And I want folks to take a look at these charts here, because the pricing difference, and John just answered that question for us, but you can see it wasn't because of the futures prices of hogs that drove prices higher out there. There's no inflation, at least at this stage, to speak of inside the hog marketplace. So that's good to know that they're back up and running, and we can have all the bacon we want. But
Indeed.
For you specifically, the level to be watching and observing here on maybe a further pullback over the next couple of days could be that 59.17, or what is it that you're looking for? When would you take action, or have you already?
Steve, I've been long that February contract down at the 58 level. I think I bought it like 6 weeks ago. So I'm just sitting on that contract, expecting it to get up to 70 or higher by into winter time. So it's not a trading position. It's a position swing trade, I'd call it.
Okay, perfect. Well, you've got the profile levels to assist you with that as well. Thanks for all the information, and as always, thanks for calling in. Good to speak to you.
Thanks, Steve. Bye.
You bet. So there are a number of questions, folks, that came in. I love my wingmen and wing women. I said I didn't have any questions, and then boom, which I love. So I'll do the best to get. I won't be able to get through everything. I can tell that with 2 minutes to go. But let me get as far as I can. So there's a question about EXK. And this is coming in from Marty. What do the charts say? So let's take a look at EXK out here. I'm not even going to pay attention to what this is. I believe this is a silver company. Today is going to be the day following bar number 9 of a TD9 count. So if there is going to be a high, it'll be today's high. if that's going to mark the high for EXK. Now, that's the daily time frame chart out here. If we go take a look at the weekly chart, the weekly chart shows resistance. So as the daily is forming TD9 count, the weekly chart is coming into the resistance area of 335. That is a TD9 breakdown level. So now the weekly doesn't have any other kind of topping signal, only that it's moving into resistance. So watch the daily out there, Marty, with regard to EXK. So watch tomorrow. If you can get a close tomorrow above today's high, well, then that would be bullish. I don't know if you're bullish or bearish. I'm assuming that's a $3 stock. You're not going to be bearish out here. So that's what I would be watching for the signals. If there's going to be a high, it should be today's high. And if you can get a close above today's high, you know that the daily did not identify where EXK is headed to, or at least that it's formed some type of a top out here. Alex writes in and says, Alex had added some more Alibaba. So let's go put up BABA is the ticker symbol out here. And for Alex, let's see if we can find some support and resistance out here. So the only support and resistance levels on a profile level, Alex, you're dealing with are 245.96, that's support, and 268. Even Steven as resistance for Alibaba. I'll read your question a little bit further, and I'll address it when we get back from this break. Steve Rhodes with TFNN.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So, Alex, I think you need to be cautious here. Last week, what Alibaba did was it confirmed a Rhodes momentum indicator signal on its weekly time frame. It generated a dark cloud cover candle. This would suggest that price could pull back to test its green line, its oscillator and change line at 232 out there. On the daily time frame chart, as price was making that high, it was with wave number 7 or letter G. So it has a topping pattern and signal that is in place out here. So support, you got 245.96. So best of luck with that trade. Alex wants to take a look at no, not Alex. I take that. No, that was Alex. Jerry wants to take a look at the U.S. dollar index out here. So here's a chart with many of the cross pairs out here. The U.S. dollars is in the center panel. To the left, I'll just expand it out. That way you can see this, Jerry. It has traded right down and found support at the bottom of its daily profile, right around 95.79, where it's trading right now. So if it's going to find support, the U.S. dollar, it's got the support level right here, right now. You can see the euro, which is the next chart, has also run right into resistance, the top of its daily profile. It's a couple of pips above the top, but the top of the profile is 1.143. So in essence, it's really right into the resistance level out there on the daily time. So if the dollar is going to bottom because of that daily profile, what you will want to see out here, Jerry, or confirmation, is a close above Stevie's red line. That's currently priced at 96.05. If you see a close above that, good chance that the U.S. dollar index is getting ready to run 97.61 would be its price target out there. So just about 10 seconds left, folks. No way for me to really get to the next questions that are out here, although Tim was just asking about EXK. We already took a look at that. So and I see, Mike, you wrote something in. We'll take a look at that perhaps tomorrow, folks. So stay tuned for 2 more great hours. Thanks so much for being here. Remember the key levels to be watching today. You had the NQ while we were on the show. Get up and test that 10,862 level. That's the top of that daily profile. Watch for today's close. A close above that, well, would be bullish to neutral because of the prior topping signal out there. But if sellers are abound, they're right here, right now. Hey, have a magical Monday, folks. Take care.